They tell you that democracy decides your future. They tell you that your vote determines the economy, the price of gas, and whether or not you can afford a home. But what if the real government does not have a flag? What if the entities actually pulling the levers of your life do not have an anthem? They have ticker symbols. We are living through the greatest illusion in human history. You feel it every time you go to the grocery store. You see the prices ticking up, eating away at your paycheck, while the news tells you the economy is strong. You feel the job instability, the crushing weight of debt, and the gnawing sensation that the game is rigged. That sensation is not paranoia, it is pattern recognition. What if I told you that there is a $9 trillion shadow economy operating right now, completely outside the view of Congress, outside the view of the president, and certainly outside the view of you, the taxpayer? This is not a theory. It is a mathematical certainty embedded in the plumbing of Wall Street. We are going to peel back the layers of the shadow banking system. We are going to expose the mechanism they use to transfer wealth from your labor into their vaults. Before we descend into this rabbit hole, I need to know who is standing with us. Go down to the comments right now and tell me where you are watching from. Are you in New York? London? Sydney? Let the algorithm know that the world is watching. And if you want the unfiltered truth that the financial media is paid to hide, smash that subscribe button. Let us get into it.
To understand the monster eating the modern economy, we have to look at its parents. The history books will tell you the crash of 1929 was caused by speculation. They will tell you 2008 was caused by greedy homeowners. That is the official narrative. It is designed to make you blame your neighbor rather than the architect. Let us go back to 1907, the panic of 1907. The stock market fell 50%. There was a run on the banks. Liquidity, the cash needed to keep the gears turning, vanished. Who stepped in? J.P. Morgan. One man, a private banker acting as the lender of last resort. He locked the leading bankers in his library and forced them to inject liquidity to save the system. It sounded heroic, but what it actually did was prove a concept. Control the liquidity, control the nation. Fast forward to 2008, the global financial crisis. We were told this was a once-in-a-lifetime event. We were told it was because banks gave mortgages to people who could not afford them. While that was the trigger, the gun was something else entirely. The gun was the securitization of debt, bundling bad loans and selling them as AAA-rated gold. When the house of cards collapsed, who paid? Did the architects lose their homes? No. The government stepped in with TARP, the Troubled Asset Relief Program. They took tax dollars from the working class to fill the holes in the balance sheets of the ultra-wealthy. They privatized the gains when times were good, and they socialized the losses when the bets went bad. Sound familiar? Look at today. Look at 2020. Look at 2023. We are seeing the exact same pattern, but accelerated. In 2008, they bailed out the banks to save the system. In 2023, when Silicon Valley Bank collapsed, they changed the rules overnight to ensure uninsured depositors, venture capitalists, and tech elites did not lose a dime. They redefined systemic risk to mean any risk to our friends. Sound familiar? Let us look at the asset bubbles. In the 1920s, it was stocks. In the 2000s, it was housing. Today, it is everything. The stock market is disconnected from reality. Housing is unaffordable for the working class. Why? Because the money supply has been expanded to protect the asset holders. The value of your labor is being diluted to prop up the value of their stocks. Sound familiar? This is the cycle. Create a crisis, offer a solution that involves consolidating power, rinse, repeat. But the mechanism they are using today is far more sophisticated than J.P. Morgan's library. It is not just a room full of bankers anymore. It is a digital, global, algorithmic beast known as the shadow banking system. This system allows financial institutions to act like banks, lending money, taking risks, without being regulated like banks. They do not take deposits from grandmothers. They move collateral. They move debt. And they do it in the dark. In 2008, the shadow banking system froze, and it nearly ended the world. You would think, after staring into the abyss, the regulators would have dismantled it. You would think they would have shone a light in the dark corners. They did not. They made it the foundation of the new world. The terrifying reality is that the 2008 bailout was not a fix. It was a purchase. The financial elite realized that as long as they remained too big to fail, they effectively owned the government. They realized that fear is the ultimate currency. If they can make the government fear a total collapse, they can demand anything. And what they demanded was a permanent lifeline.
So how do they do it? How do they move trillions of dollars around the world in seconds, creating money out of thin air without technically printing it? You might think the Federal Reserve prints money and gives it to banks who lend it to you. That is the fairy tale version. That is Econ 101. The reality is a high-speed, high-stakes pawn shop that runs every single night while you sleep. It is called the repo market or repurchase agreement market. This is the heartbeat of Wall Street. It is the mechanism that keeps the shadow banking system alive. Here's how it works simply. A bank or hedge fund has an asset, let us say a U.S. Treasury bond. They need cash now to leverage a trade. They sell that bond to another party with an agreement to buy it back or repurchase it the next day at a slightly higher price. It sounds boring. It sounds technical. But this is where the bomb is buried. Because in this market, collateral is king. As long as everyone agrees the collateral is good, the cash flows. But what happens when the collateral is garbage? What happens when the banks stop trusting each other? It happened, and I'm not talking about 2008. I'm talking about September 17th, 2019. Months before the world had ever heard of COVID-19, the repo market exploded. The interest rate banks charge each other for overnight cash is usually around 2%. On that day, it spiked to 10%. The plumbing of the global financial system clogged. The banks stopped lending. The shadow banking system began to seize up. We were hours away from a total freeze that would have made 2008 look like a picnic. ATMs would have stopped working. Payrolls would have bounced. Why did this happen? Because the system ran out of cash. The elites had leveraged themselves so deeply that there was not enough actual liquidity to cover the bets. And here's the twist. Here's the smoking gun. The Federal Reserve stepped in, but they didn't just lower rates. They opened a fire hose of cash directly into the repo market. They started printing hundreds of billions of dollars a night to bail out this shadow system. This was before the pandemic. They told you the printing in 2020 was for the virus. They told you the stimulus checks caused the inflation. That is a lie. The printing started in September 2019 to save the repo market, to save the shadow banks. The pandemic just provided the perfect cover story to make the temporary bailout permanent. But who were they bailing out? Who was on the other end of those repo trades? You will not believe the name. The receipt is wilder than you think. And when you realize who actually owns the debt of the United States, you will understand why the system is designed to never, ever be paid back. We need to dissect this beast. We need to look at the guts of the shadow banking system and the repo market, because this is where your wealth is being stolen. The shadow banking system is currently estimated to hold over $52 trillion in assets globally. That is nearly half of the total financial assets in the world. Yet it operates with almost zero transparency. Unlike a traditional bank where you deposit $100 and the bank keeps $10 in the vault, known as fractional reserve, shadow banks run on rehypothecation. This is a fancy word for fraud.
Here is the analogy. Imagine you own a car. You give the title to a lender to get a loan. Now imagine that lender takes your title and gives it to another lender to get a loan for themselves, and that lender does it again. Suddenly there is one car, but 3 different banks claim they own the title as collateral. This is rehypothecation. In the US, there are limits on this. In the UK and the shadow banking world, it can be infinite. They are creating chains of debt based on the same asset, leveraged over and over again. This creates an illusion of wealth. It makes the system look flush with cash. But if the value of that one car drops, or if the original owner defaults, the entire chain explodes instantly. This is parasitic finance. It produces nothing. It builds no factories. It invents no technology. It simply extracts fees and leverage from existing assets. Let us look at the numbers. They are staggering. First, leverage. In 2008, Lehman Brothers was leveraged 30-1. That means for every $1 of their own money, they gambled with $30 of borrowed money. Today, through the shadow banking system, hedge funds effectively achieve similar or higher leverage using derivatives. Second, the 2019 spike. On September 17, 2019, the repo rate hit 10%. To fix this glitch, the Fed pumped $53 billion into the system in a single morning. By the end of the week, it was hundreds of billions of dollars. Third, the balance sheet. Before the 2008 crisis, the Fed's balance sheet was around $800 billion. Today, despite tightening, it sits above $7 trillion. That is an expansion of nearly 800%. Fourth, derivatives. The total notional value of the derivatives market, which are bets on bets, is estimated to be over $1 quadrillion. That is more money than exists in the entire world. This is greed weaponized. The mechanism relies on moral hazard. Because these shadow banks, including hedge funds, money market funds, and investment banks, know that they are systemically important, they take insane risks. They know that if the repo market freezes, the Fed must step in. The Federal Reserve has evolved. It is no longer just the lender of last resort for commercial banks. It has become the dealer of last resort for the shadow banking system. When you hear about quantitative easing, or QE, do not think of it as stimulating the economy. Think of it as the Fed buying the garbage collateral from the shadow banks to keep the repo market flowing. They buy the toxic assets and give the banks fresh cash. Where does that cash go? It does not go to your wages. It goes into assets, stocks, real estate, crypto.
This is why we have the K-shaped recovery. The asset holders, the elites, see their wealth skyrocket because the Fed is pumping the value of their collateral. The wage earners, you, see your purchasing power collapse because that new money dilutes the dollar. It is an engineered collapse of the middle class. They are using the repo market to bypass the democratic process. If the government wants to spend money, it is supposed to tax you or borrow it by selling bonds. But now, the Treasury issues debt, and the shadow banking system buys it, knowing the Fed will monetize it via the repo market or QE. It is a perpetual motion machine of debt. And here is the darkest part: the Eurodollar system. Much of this shadow banking happens offshore, dollars held outside the U.S. These offshore banks create U.S. dollar credit out of thin air, completely outside the Fed's regulation. But when they crash, who bails them out? The Federal Reserve. Through central bank liquidity swaps, the Fed sends billions of dollars to foreign central banks to bail out their shadow banks. You, the American taxpayer, are unknowingly backstopping the gambling addictions of the entire global elite. They have built a system so complex, so interconnected, and so fragile that it requires constant exponential injection of liquidity just to stay alive. It is a Ponzi scheme. And like all Ponzi schemes, it requires new money to pay off the old investors. When the music stops, and it always stops, the holder of the asset is safe, and the holder of the currency is destroyed. They are gathering the assets. You are holding the currency. We are standing on the precipice. The system is moving faster than ever before. In 1929, information moved at the speed of a ticker tape. Today, algorithms execute trades in nanoseconds. A collapse that took days in the past can now happen in milliseconds. The next crisis will not be a slow bleed. It will be a cardiac arrest. The solution they are preparing is already visible. When the shadow banking system inevitably breaks under the weight of its own leverage, they will tell you that the old system failed. They will introduce the central bank digital currency, or CBDC. They will sell it as efficient. They will say it prevents bank runs. But in reality, it is the final lock on the prison door. It allows them to bypass the banking system entirely and control your liquidity directly. It is the ultimate tool for the shadow government to come into the light.
We are living in a state of denial. We trust these institutions because they are built of granite and marble. We trust the dollar because it has always been good. But history is a graveyard of currencies that always were good until the day they were not. We are trusting institutions built on borrowed time. The transfer of wealth is not an accident. The inflation is not a mistake. The debt is not a budgeting error. It is the design. You have a choice. You can remain in the comfortable illusion that the people on TV have a plan to save you, or you can accept the harsh reality that you are the collateral damage in their Game of Thrones. Educate yourself. Get out of debt. Own real assets. Do not trust the paper promises of a bankrupt system. I want you to ask yourself one final question, and I want you to answer it honestly in the comments below. Are we wiser now? Or are we just walking the same path as 1929 and 2008, only this time in better suits? If you found value in this deep dive, if you want to understand the game so you do not get played, share this video. Send it to someone who thinks the economy is fine. Wake them up. Subscribe to the channel. We are just getting started.